This is your LMAX exchange technical update for Friday, January 6, 2017. Euro dollar. So the euro has seen a nice little bounce out from that recent 14-year low at 103.41, and there is risk for additional corrective upside. But again, corrective is the key word here as the market remains in a well-defined downtrend, and any rallies are still classified as corrective ahead of that next lower top and fresh downside extension below 103.41 and towards parity. At this point, it would take a break all the way back above 108.75, that high that we saw back on the 8th of December, to negate the current bearish outlook. Sterling dollar. So cable has seen a nice little bounce as well in recent trade, although this market remains confined to a broader downtrend, and while it holds below a key previous base at 127.96, there is risk for rallies to continue to be very well capped in favor of what could be that next downtrend, downside extension and retest of that plus 30-year low that we saw back in October at 118.40. Dollar yen. So dollar yen is finally seeing a correction play out after the market surged up to highs of 118.67. At this point, we could see the setbacks now extend a little bit further down, potentially into the 112 area in anticipation of that next higher low and bullish resumption back above 118.67 and through 120 further up. Ultimately, any setback should now be very well supported ahead of 111.45. Euro Swiss. So Euro Swiss has been chopping around in recent trade, but overall the pressure remains on the downside here, and there is risk for a fresh drop to retest that 2016 low at 106.24. Aussie dollar. So Aussie has been under pressure overall, but we have seen a nice little recovery over the past several sessions, but this market should soon run into resistance here, as this is only a correction in favor of that next lower top and fresh downside extension back below key support at 71.45. At this point, only back above 75.25 would compromise the bearish outlook. Dollar CAD. So dollar CAD has seen a sharp setback over the past several days, but at this point the market could be looking for a higher low above 30.81, that recent low, ahead of that next major upside extension back above 35.99 and towards 140 further up. Dollar CAD has been trading in a longer term uptrend, and so setbacks should continue to be very well supported. Only back below 30.81 would compromise this constructive outlook. Kiwi dollar. So the New Zealand dollar has seen a bit of a bounce in recent trade, but this market continues to show signs of topping out in 2016, and a lower top is now sought out somewhere ideally ahead of 72 in favor of that next downside extension towards 66.76 further down. SPX 500. The S&P 500 has recently put in a record high, but the market is showing signs of topping out, and a break back below recent support, which comes in around 22.32, would strengthen this outlook and accelerate declines towards next key medium-term support at 21.80. Gold. So gold has seen a nice rebound over the past several sessions, and this market could be putting in a more significant base after it was well supported down in the 1120 area. At this point, this latest upside now suggests that the market could be ready for a pushback above 1200, which eventually paves the way for a more significant structural shift and resumption of gains to retest the 2016 high at 1375 further up. Only back below 1120 would compromise this newly adopted constructive outlook for gold.